Hey there, Jed Barker here with Best Life Mortgage. Today, I want to spend a few moments, maybe see how long it is, but I want to spend a few moments talking about home loan qualifications for business owners. These are people that own their own company, they run their own business. It could be a big business or a small business, could be a completely self employed person with no employees at all, but they are self employed, whether that be a business owner or a sole proprietor. They're self employed and they still want to buy a house. Sometimes this is looked at as a challenging event where it's like, hey, I'm a self-employed person or a business owner, but I want to get a home loan. And some people look at that as a difficult thing, but in the reality, it's not any more difficult than getting approved if you're an employee. You just need to understand the process of getting approved as a sole proprietor or a self-employed business owner. And if you understand the rules, then it's just as easy as if you're getting a conventional loan with a W-2 employee job, that kind of thing. But it can get difficult when you're working with someone who doesn't understand the rules or the guidelines of getting a home loan, qualifying you with your income and everything. And it can get complicated if the person guiding you down that process doesn't understand it themselves. It's like having a blind person guide a blind person, to get a home loan. And that's, I think, where you get some bad experiences in the home loan process is when the person guiding you and leading you doesn't understand the process that well. So it gets confusing, not only for you, but for them too. So let's talk a little bit about how to get approved for a home loan when you are a self employed person. And so if you're self employed, it means that when you file your taxes, right, you're not filing as an employee. You typically don't have W 2s. Sometimes you do because you can W 2 yourself as an employer of yourself, but a lot of times you don't. And you're filing as a self employed person. You could be filing with business tax returns, corporate tax returns, S Corp tax returns, or you could be filing completely with your 1040 tax return, meaning that you're going to file Schedule C on your tax return. And if you do that, that's fine too. That's just part of filing taxes. And so when we're looking at a self employed person, we're saying, hey, we're calculating the person's self employed income as well as their assets and their credit, just like we do for any borrower. So, no difference, right? The only big difference here is that we're not just looking at their payroll and their pay stubs and what their salary is. We have to look at their taxes because let's say you are earning in your business $1 million a year in gross revenues. That is not your income. That's your business's revenue. There's a difference between revenue and income when it comes to businesses, right? And so we can't just look and see what your business earned. We have to actually look and see what you earned on your tax, what you earned or what you told the IRS was your net income after all of your deductions. So a lot of times I do see like a business may file $1 million gross revenue, but the business owner, they actually at the end of the day could have zero net income or zero income for themselves just because of the way that they filed their taxes and all the deductions they took and stuff like that. And so that's where it can get tricky for people is they can feel like they're making a lot of money as a business owner, but if they write off everything they could plus do all kinds of other things on their taxes, they could literally have zero income to use on a home loan because there's something difference between your income with a home loan and your qualified income on a home loan. And what we're looking at as self-employed business owners and as a loan originator, we're looking at your qualified income when it comes to home loan financing. And so there's a couple loan products that work really well, but as a self-employed person, you can use any loan product you qualify for. So that means you could even use a conventional loan, you could use an FHA loan, you could use a USDA loan, a VA loan if you qualify. You can use any of those loan products because what I'm going to be asking for to qualify you as a self employed person, typically to start off, is 2 years of self employed tax returns, whether that be personal tax returns or it could be business tax returns or both. And we're going to be looking at essentially the net income after all of deductions. So all deductions, you made $1 million and you paid your employees 900,000. You had all these different expenses, and you're left with 100,000 that you paid yourself as your income. Then that's going to be your income, $100,000, and that will be your qualified income. That's a pretty simple way to put it. So what we do is look at both years' tax returns. We look at all the expenses, the deductions, your net revenues, your net income, and that will be your qualified income. And if you have enough income to qualify for the home you want to buy based on your tax returns, then typically we're just going to be going conventional at that point. And now you can use a minimum down payment of maybe 5% or 3.5%, or it could even be zero if you qualify for VA or USDA, right? So that is one way to do it. But there's a couple other ways that could be very beneficial for those of us in the room, in the chat here, or in the video that don't qualify for a traditional home loan, but we still want to buy a house. We want to get our family into a home, but we don't have the net income on our taxes to qualify. Here's a couple examples of things we can do. We could first off look at business bank statement returns or personal bank statement returns. In this scenario, we absolutely don't look at any tax returns. So your income reported to the IRS, just throw it out the window. Not even important to look at. We can get rid of it completely in this scenario. What's going to be looked at is 12 months of bank statements. So it's all the deposits into your bank account that come from income. And if it's a personal account, we're going to look at 100% of your business deposits, and we're going to give you 100% of that income with no deductions. And so if you have, 10,000 a month roll into your business, that'll be a $10,000 income for you, as opposed to maybe the tax return shows as zero, or maybe it shows it as three, whatever. But it's a huge upgrade now for your qualifying. If it's a business tax return, we're going to be taking a percentage of the net deposits and giving it to you. Sometimes it's 50% of the deposits, and sometimes we can even do more than that. Sometimes we can go up to 80% of the deposits, and actually sometimes even up to 90% of the deposits. So that would be a good way to go too. And then what happens is we take the income, we get all the cash flows of that, we give you a qualified income, and now we use that income as opposed to even looking at your tax returns. So remember, tax returns crumpled up, throw them out the window, throw them in the garbage can. We're not looking at your tax returns, because now we're just looking at your cash flow through your business account or your personal account, depending on how you run your business. And that can be a huge upgrade to get you qualified, because now you'll have the income to qualify using a business bank statement or a personal bank statement loan. Here's another product that works really well for certain people, even if you're not self-employed, but sometimes self-employed people use this too. It's called a no ratio loan. This is a no income based documented personal loan for you to buy a primary residence. And what I mean by that is, let's say you want to qualify for a home loan, but you don't want to show any income documentation at all. You don't want to show your business bank account income. You don't want to show tax returns. You're just not going to show anything. That is absolutely a positive thing to do if you need to, and we can make that happen over here. And so what happens on that is we go ahead and we throw out the window completely all income requirements. But to qualify for that, you do need to have some higher qualifications in some other areas. So you're going to have a qualified credit score higher than some other loan products. It's going to be over 700. You're going to have a down payment requirement of in the 20% plus. So that's a bigger down payment, so you can have more skin in the game, making your loan a more qualified loan. And that's really about it. One other thing I can think of at the top of my head here is you're going to have more money in the bank when the loan closes, because usually it's going to be 6 or 12 months of reserves. And what that means, if your loan, let's say, is $2,000 a month to buy your home on a mortgage, we're going to require at least 6 months or 12 months. So 6 months would be 12,000, or it could be 12 months. 2 times 12 is 24. So $24,000 extra after all expenses on a no ratio loan. That'll make your loan more secure, more comfortable for the lender. But imagine, some scenarios that I've ran into lately of people who use this loan. One of them has been someone retiring, completely retired. They didn't have enough income in retirement to qualify, but they did have a lot of cash on hand. I mean, in order to buy the house, they had, I think, 40% down. They had a great credit rating, but didn't have any more income to qualify for the conventional financing. So we just used a no ratio. They got into the home they wanted. Beautiful product there. Another one could be people who just started a new job, and the new job is now paying them maybe a great commission for a salesperson, but that they don't have the history or experience with commission, so we can't give them any income when it comes to qualifying them for commission. So now they can jump over to a no ratio loan if they have the down payment and the credit. So that's another great example. Or maybe you're just moving to a new area and you don't have a job yet, but you have plenty of cash from a sale you just made. I had a customer or a client of mine moved from California, sold a $1 million house, had about $800,000 from that sale in net revenues, came out here, wanted to buy a $500,000 house, didn't want to spend all their money though. So they did a no ratio loan. They put $300,000 down, picked up a couple $100,000 mortgage, and they didn't have to show any income. Yeah, that's a beautiful process there as well. So as you can see, there's a lot of ways to qualify as a business owner for a home loan. Just because someone's telling you, hey, you don't qualify, you don't make enough money on your taxes, sorry, we can help you out next time. That is not the case. There is so many options over in the industry. And at Best Life Mortgage, for me, as a personal mortgage broker, I understand self-employed income. I understand the tax returns. I understand sometimes you can't even use the tax returns, right? You just need to get off of that and go non-conforming or a non-conventional mortgage way. So if that's been helpful for you, I would love to assist you as a self-employed borrower. I'd love to walk you through any process scenario to get you qualified and take that loan from start to finish. Again, my name is Jed Barker with Best Life Mortgage. You can see my name and number here at the bottom of the screen. If this has been helpful for you to just sort of go through this with me, to hear about the self-employed borrower loans, please give me a thumbs up. You could also share this video with your self-employed friends or anyone else who would like it. But adios. I hope this has been helpful. I'll talk to you soon. Bye-bye.